us. We a day late, but guess what? If y'all watching on replay, y'all later. So we on time.
We did this for your convenience.
Right. It's all worked out for the good. Oh God. Thanks for joining us yesterday. We normally do power collaborations on Wednesdays at 8. Yesterday, we had some scheduling conflicts happen because life happens. So we're coming before you on Thursday. So we're going to jump right in and make this quick. Zoom in, give you guys 3 quick tips on how to leverage the law at year end to drive up profits in your business. We got 3 quick tips. We're going to jump right in them and be gone. If you have any questions as we go along, you can plug them in the chat or you can DM us and we will do our best we can to answer them. Yeah, so let's jump on in.
Yeah.
Tracy, you want to
So
start?
we can start, yeah. We can start with the first tip. I think we talked about this a couple weeks ago in terms of your entity structure. You know, the first thing that you can use is changing your structure. That, of course, would require you reviewing how you are operating and what your operating agreement says about your structure. And, you know, whether or not you want to and you can afford to, because there's a financial impact of that. There's a legal impact of that. I don't know if you want to chat about the financial, then I'll chat about the legal.
Yeah, sure. So from a financial perspective, the buzzword is always LLC or S Corp, right? So what people often misunderstand is an LLC is the limited liability of your company. That's not your tax designation for filing. When you file your taxes, you either file as there's several different ways. I'm not going to go over them all. We'll focus on Schedule C 1040 filings, which is you're filing them with your personal tax return, or you're an S Corp. I'll go over that one because that's the biggest buzzword that's happening. And that's what Tracy also can touch base on as far as your documentation that's required legally. As an S Corp, I would strongly advise that if your gross revenue is over $80,000, that you seek guidance from a CPA or tax professional on whether or not you should be filing as an S Corp entity type on your tax return. And what that requires is you to register Form 2553 with the IRS. Now, where a lot of people go wrong with this is you wait to see how your year is going and whether or not you should file an S Corp. And then when you see you hit this milestone, like my clients that 5X on average in 3 months, they like, oh, I done made all this money. Let's go ahead and change it so next year I won't have to pay taxes on it all. That's not how it works. You have to file the form the prior year. So for example, it's too late to file a 2553 and designate an S Corp for the 2023 tax year filing, but you should be filing it now for 2024 if you've sat down with your fractional CFO and gone over your financial strategy, you know you're going to hit over the 6-figure mark next year. There are, just like in a lot of different cases and everything that Tracy and I talk about, there are some exceptions and there's differences depending on what's happening. And the IRS does grant exceptions for late filings, but you got to give them the reason why the filing is late when you send in the form. So that is possible. But this is the time of year to leverage the S Corp filing, or you could be a C Corp. There's other options, y'all. There's other options. But either way, this is the time as you're planning your goals for your revenue in 2024 to start filing that paperwork with the IRS. And Tracy, from a legal perspective, when they're doing formation and switching, the way they're set up, what do they need to do?
So with that, they talk to you or your, whoever their CFO is, and we'll come back and we look at their paperwork. We look at their documentation. We look, especially in the operating agreement, we look at how the company, the LLC, is going to deal with the taxes aspect of it. We also make sure that you can continue the legal part of the legal requirement is making sure that you're actually paying yourself as an S corp, you're paying yourself appropriately. So when it comes to, it's not what your company can afford, it is what the market, a reasonable rate is for that position. So you go through that process with your CFO, with your tax advisor. Then we'll look at the documentation and make sure that your operating agreement says, is reflective of what your structure is, because that operating agreement is what's going to protect you. If anything, takes place, or someone says that you operate out of the norm of your business. Because without getting into it, there's a whole idea behind piercing the corporate veil. So if you change to a particular structure, but you're actually operating in a different mode, or your document says one thing and you're operating, in a different sense, you open up the doors for liability to now fall on you personally. And that's the whole idea behind having the LLC, is making sure that liability is limited to the corporation. It doesn't reach to you. So you need to make sure that however you operate and however you make that structure, understand what the legal implications are. So again, the S corp, you have your timelines when you need to do so, but you have to make sure that you are operating in the way that you should, and that the documents of your business reflects that process of operating. So that's why we said, every year you should do an overview, an audit of your operations and your internal documents to make sure. And it's easy for us to forget that, right? It's easy for us to get caught up in the business, do what we're doing, and then not remember, like, oh shoot, we have these things that we should be looking at. So it would be a good practice, whatever you decide or however you decide, just make sure that your documents align so that you keep the protection of the LLC.
Yeah. Awesome. I think that actually leads to one of our next tip, which is liability. And talking more about what that looks like. The next tip is leveraging the liability aspects. Like, check your numbers. What liability can you afford to absorb in your business? Or if you're still filing as a Schedule C as an individual, through your insurance, you need to be checking that. Do you have enough insurance? Many a times we start our businesses, and depending on the terms that you signed up with your insurance, you're not evaluating the amount. So if you got a 2-year policy, that may not necessarily mean you should stay locked in for that 2 years if you have substantially increased in your level of liability. So with that piece of it, Tracy, can you speak more towards the liability component as it pertains to, like we were talking about, insurance and contracts?
Yes. So the big portion, what Kelly talks about, the internal, and I'll tell people your business is both internal and external, right? And you have to, a lot of us focus on what the forward facing aspect of the business looks like, and not necessarily spend the time on the back office of our business. So making sure that your numbers, align, and that you can actually absorb the liability. The forward facing, which is more where the, part of the pertinent legal aspect comes in, is what does the contract that you're entering with individuals say? Is there unlimited liability that you're going to have to take on, or do you make sure that you have a clause in there that limits your liability, whether it's limiting the liability to the profits that you would make under that particular contract, limiting your liability to what your insurance will cover, to make sure that you don't take on something more than, if you have $1 million insurance and here's this contract that says you're liable for any and all damages, including lost profits, and this is possibly a multi-million-dollar contract. You open up yourself, beyond your coverage. So making sure that the contracts that you're entering on the forward-facing side reflects what you can do financially through your insurance and, your risk tolerance. Because some people, they will fly with it, and they'll be like, I know, but that's all right. I wanted to take that chance, and that's fine if you want to take that chance. but do so with your eyes wide open.
Right. Yeah, no, that makes sense. And my piece to the liability side, I mean, it kind of what you said goes for both the financial side and the legal side. The only thing I can think to add to that is check your accounts receivables. This is if you're not regularly checking your AR and you have clients that you typically carry a balance, this is the time to check those things, because depending on how long the balance has been and where they're located, there could be, and your contract terms, there could be money on the table that you could risk having to either spend more money to send it to a collections agency to try to collect it for you, or having to write it off. So definitely check your AR during this time.
And to that point, like when you have money sitting on the table, I've had some clients where I've had to tell them, I'm like, listen, it's going to cost you more to, and I shouldn't say clients, potential clients they've called. And, we've taken it on. And then once you actually realize what's going on, I have advised it's going to cost you more for me to go after this than what you are actually owed. So if you're not checking those things in the backdrop, you open up that quagmire of this person may owe you, $50,000, but it's going to cost you $80,000 to try and recoup that 50. So, what Kellé says, having someone there that's going to be looking at these numbers for you is going to make that difference. They can catch those things a lot earlier and avoid, a bigger pain down the road.
Right. Exactly. Hey, Alicia. Thanks for joining us. And our third and final tip, you'll have to go back and catch the other tips, because I don't know, we in a time crunch. We may or may not recap, but
yeah.
The last tip is leveraging your pricing. So how to set your pricing and making sure that your contracts are clear on your payment terms is the pricing aspect of it. So this is the perfect time as you're going into year end to look at your pricing because of two things. Number one, you can see how, if you priced yourself where you should have throughout the current year that you're in. And number two, you can get a good assessment on, are you going to increase your prices? If so, what areas? And then talk to your fractional CFO about your gross revenue goals for the next year, because of course that your pricing impacts that. So this is the perfect time to talk about pricing. The ideal thing to do, especially as you're reviewing the contracts, to make sure that your pricing is clear, depending on how your contracts are written, you may want to review everyone's contract this time of year. Like if you have a January to December, or if they're from, if they came in May and they're May to May. But either way, set reminders for yourself to when your clients' contracts are due if you don't have a system that is automatically going to remind you in the workflow to do that. And double check it at year end to make sure you have those reminders set. So that's my piece on the pricing piece of it. What you got, Teresa?
So contractually, this is, Kellé said, review the payment pattern as well, right? Just you signed a contract doesn't mean you can't change it. If you have a client that's slipping in how they're paying, or they're not paying when they're supposed to, and you've kind of let that slide, but you have other, you can always go back and say, listen, here's a pattern of your payments, and it's an issue, or, do we need to talk about revamping that and amending the contract? So pay attention to how you're pricing, making sure the wording is clear. But depending on the value that you place on that client as well, you can go back and amend your pricing clause or your payment clause to make sure that it's now meeting both of your needs. So whether it's the client's supposed to pay on the 1st of every month, and you realize, hold on, they're not paying till the 14th, 15th. One, can that work for your business? And if so, then, amend the payment term so it's now reflected, it's being paid on the 15th. If it's not, and you're starting to hit your other stuff, you're starting to hit other issues, then you can go to the client and say, listen, you're due on the 1st. We didn't have anything in here about a late payment fee or penalties or anything along those lines. And here's a pattern of what you've been doing. we need to address this. And you can look to insert something along those lines. So just because you signed the contract doesn't mean the contract is set in stone. You can always renegotiate it based on how things are going. But I always tell people, if you're going to go renegotiate it, make sure you have the data to back it up. So, that's where you're going to look at Kellé, to say, hey, what is it looking like in, with the receivables? And go to the client. It's an easier pill to swallow than just being like, I want to change this just because,
Right.
or, I feel like it. I'm changing how my business structure is. And you're free to do so. But there's a part of client relationship that's going to take place in having that conversation. So having the data to back up what you're looking to do makes that conversation, easier.
Exactly.
Like, this is why you have the, professionals in the background. I always tell people, I might blame the lawyer. You can be like, my counsel says, da 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 da. That's all right. I'll play that role for us, right? You maintain the relationship, the money coming in. I'll be
I'll be the scapegoat.
Yep.
Exactly. So that's it. I put the 3 quick tips up. I'll post them again real quick. Those are the 3 quick tips. You guys can go back through and watch them. As you watch them, if you have questions, don't hesitate to DM and reach out. I'm going to, if you got this far and you didn't know who the heck we were, thank you for sticking with us, because that means we gave you some valuable content. And I will do an outro myself, Tracy, then you can do yours and take us on out. Yes. I am Kellé. I'm a fractional CFO to business owners, service-based business owners that are burning themselves out in their business. They already have a bookkeeper, but they're taking their reports and just throwing them in a file or a folder online and not looking at them until tax season or things go wrong. We take those reports from you and we provide you with financial strategy. So we're paying attention to your numbers throughout the year, and helping you to strategize behind those numbers and make sense of them. You can find me at this bit.ly/KWK links. It is, case sensitive. So make sure you use the proper case, and all of my links are there.
Hi, and I am Patrice Tisdale, your professional attorney, or you should say your professional legal strategist. I work with service providers and real estate investors to learn how to leverage the law to their advantage. So these are some of the tips that we talked about, the different ways that we work with. The link that was just put up, that's where you can find my other links if you'd like to connect. I work with individuals that recognize the need to have providers like us in their back office, and understand we can talk about the value that it adds to expanding your business and expanding that your bottom number. So reach out, as Kellé said, ask the questions in the comments. We can add more information there, and we will be here typically Wednesdays. We will announce if we need to change it, because life happens and we're mothers and business owners and everything else. So, just keep a watch for us.
Yes.
Alicia.
Awesome. Yeah, Alicia, we are your scapegoats. We know. We the bad guys. It's fine. That's part of why we're here. So you can take off the pressure for our clients. So
there you go.
Thank you for trusting us. Thanks everyone for joining us. And like Tracy said, see you next week. Bye now.